Good morning, everybody. It's Monday, December 9th, 5:24 a.m. Central Time. Grain markets are mixed to higher this morning. March corn futures unchanged at 440. January soybeans up a quarter cent at 994. March Chicago wheat up 4 3/4 at 562. March Kansas City wheat up 4 at 557 3/4. March spring wheat up 5 cents at 601 1/2. The corn market had a nice day on Friday. Let's start there.
So the most heavily traded March 25 contract gained 5 cents per bushel and posted its best daily close since November 20th. Demand for U.S. corn has been strong. Both exports and ethanol production have perhaps outperformed expectations. Farmers are tight holders of their 2024 bushels. End users have had to push basis bids in order to secure needs. Private groups estimate that fund traders were net buyers of 11,000 contracts of corn as of Friday.
Friday was a good day. The market gained 5 cents in the March contract. Thursday was also a good day. The market gained 5 cents in the March contract. So you had a 2-day rally to the tune of 10 cents, which in this low volatility, kind of choppy environment, that's a pretty good 2 days. I'll take that. The corn market posted its low back in August. And in a year where a big crop is inevitable, as it appeared to be back in August and ended up being a big crop, you're going to post your lows early very often. And that's exactly what happened. So you're going to have some resistance here. You get this kind of like wedge looking pattern on the chart. 444 might be a resistance area today. Certainly that I think early October high near 452 in the March contract, a little bit of technical resistance. More interesting to me than the flat price action, maybe the spread action. March corn futures, the nearby contract, is now trading above the December 25 contract. So you've got an inverted old crop, new crop spread here, which is very interesting in a market that, we've been told is extremely oversupplied. To see this sort of inversion is not normal, and to see this rally in the spread is not normal if everything that USDA has told us is true. And I think we've got a USDA report tomorrow. USDA is going to have to make, it may not be tomorrow, but they're going to have to make some upward demand revisions. Export sales have been very, very strong. And unless you're really in that whole, front loading the program camp, and I don't know where I sit there, but maybe you're in that camp. I don't know. I think exports have to come up. Ethanol production has been fantastic. And I know margins have backed off a little bit, but I think they may need to come up there as well. So I think the market is trading, perhaps they're trading a tighter supply and demand situation than what USDA has led us to believe. In today's premium video, Pete Meyer is going to be on, and we're going to do a balance sheet review. We're going to do the 24-25 corn balance sheet as well as 25-26 and look at some prospects with regard to ending stocks to use ratios. We're going to do the exact same thing for soybeans. That will be a good one out later today.
The funds reduced their net long position in the corn market last week. CFTC released weekly commitment of traders data on Friday. As of Tuesday, December 3rd, large money managers were net sellers of 11,000 corn contracts. Funds were net buyers of 13,000 contracts of soybeans, and they were net sellers of 10,000 contracts of SRW wheat on the week.
These are hugely, massively uninteresting and non-consequential positions that the funds are holding in the markets. Across corn, soybeans, and SRW wheat, you've got a net short of 43,000 contracts, which is nothing. They're very close to flat. Typically, going into the end of the year, you got 3 weeks left to trade in the calendar year. If the funds had a big position in one of these markets or all of these markets, if there was a big long, maybe you could expect some selling. If there was a big net short, maybe you could expect some short covering. But in this sort of instance, I don't know what to expect, if anything, into the end of the year. It's really actually pretty incredible and remarkable to me how little volatility we've seen in the markets following the election. We've talked about all the stuff with regard to tariffs and policy and all the things that could change. Yet we've seen almost no volatility in the grain markets following the election, despite all of these things that are kind of up in the air. You throw biofuel policy in there also. Just so many unknowns with Trump coming back into office in January. Yet the markets and the funds don't really seem to care about any of this. They're just very agnostic about all of it.
The 2025 Russian wheat crop is projected to be unchanged from this year, while Ukraine's crop is slated to increase. Following crop tours in both countries, Argus Media estimated next year's Russian wheat crop at 81.5 million metric tons, slightly higher than this year's 81.3 million metric tons. Dry conditions that resulted in a decline in this year's crop production led to a reduction in the planting of next year's crop. Damaged winter wheat will likely be replanted to spring wheat, which will keep the total wheat area similar to this year's harvest. Next year's Ukrainian wheat crop is estimated to rise Due to increased planting, the crop is estimated at 23.7 million metric tons, an increase of almost 6% from this year's 22.4 million metric tons.
It was some point, was it like middle of last week? We had that story about the worst Russian wheat
Yep.
ratings ever or something. It appears as if that maybe have been a non-starter. This estimate of 81, 81 and a half or 81.3 is pretty much on par with what USDA has printed. Russia is very important. They're the top wheat exporter on the planet and should be this year. Maybe the crop's a little bit lighter than what's been advertised, but I don't know. The market certainly doesn't appear to care at all. Wheat's up a little bit this morning, but has been under a lot of pressure and has acted very, very poorly.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about a premium video from last week?
Chris Barron was on, I forget, Thursday last week maybe, ROI trends and budget update on the farm. And this is what I would call hardcore budgeting information, perhaps. Chris has some of my favorite charts, and what they are, they're charts of return on investment or ROI over the years aggregated across his customer base, which are farmers all across the Corn Belt. And I think that if you guys are in the dark and if you're not watching the premium stuff, you are in the dark. But if you're in the dark with regard to how ROI has looked for farmers across the country, not just you, but for farmers in general across the country over the last 15 years, and how this thing kind of tends to cycle. We go in good cycles, bad cycles. And how do you stack up compared to this broader group of farmers that are doing the same sort of thing? I think this is a very interesting watch. The farm budgets don't look good. We know that, but Chris got into some more specifics with regard to 2024 and also 2025. The one other thing that Chris does is he tells us across his customer base what percentage of the crops have been sold. And I think that's another interesting metric to look at if you're a farmer, or maybe if you're a banker, maybe you're somebody in the commercial grain business. It's very, very helpful and super useful information, in my opinion. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. Cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. We really won't try to sell you anything else. We'll never call you. We'll never send you an email outside of our stuff that we blast out every day. You can text us or email us if you have questions, but that's it. Check that deal out this morning, guys. I'll forward you a copy of this morning's email, which includes that video with Chris.
Following President-elect Donald Trump's tariff threats, Mexico now wants to negotiate. During the last week of November, Trump threatened to impose tariffs on Canada and Mexico in an effort to curb the flow of illegal immigrants and drugs into the U.S. The threats have caused Mexico to crack down on smuggled drugs coming from Asia. They've also led to the detention of thousands of migrants and the seizure of a record amount of fentanyl. Mexico plans to adopt a similar investment screening approach as the U.S. to align with the rules of its trade partners. The country plans to offer incentives to attract manufacturing investments, including the production of batteries that the U.S. would like to have produced regionally.
I think Mexico is starting to make it clear that they want nothing to do with any sort of trade war, and that they are going to take some steps to stop the illegal immigration and stop the flow of drugs, that sort of thing. Mexico, of course, has been the top buyer of U.S. corn, and that's why we care about this. They have been the last couple of years, and I think they will continue to be. They account for 40% of all U.S. corn export commitments. They're going to be the largest corn importer on the planet this year, 24 million metric tons. That's about 13% of all global imports. And the U.S., of course, is the top exporter of corn on the planet, accounting for 31% of all exports. So it just makes a whole lot of sense for the United States to sell corn to Mexico, and I believe that that will continue.
Food prices have climbed to their highest level in more than a year and a half. The United Nations Food and Agriculture Organization's food price index averaged 127.5 points in November, up 0.5% from October and 5.7% higher than the same time last year. The index is now at its highest level since April 2023, but remains much lower than the record high that was set back in March of 2022 after Russia invaded Ukraine. The rise in food prices has been driven by an increase in the cost of vegetable oils. Last month, vegetable oil prices climbed 7.5% from the prior month, the largest increase since July 2022. Cereal prices, meanwhile, declined by 2.7% in November compared to October, partially due to a decline in global wheat prices.
So this index is not meant to be like prices at the grocery store. That would be more of like a CPI type thing. This is more like raw commodities. And the 5 categories that they track are meat, dairy, cereals, vegetable oils, and sugar. So this thing did post an all-time high shortly after Russia invaded Ukraine. We've backed off. It's still highish overall, though, despite the fact that, the things we track, corn, soybeans, wheat, are very cheap. There are some other things that are not so cheap. But I don't know if I'd read too much into this. What did cattle do on Friday?
They were mostly higher after a rough couple of days. Live cattle were 25 cents lower to 62 cents higher. Feeders saw gains ranging from 90 cents to $1.25 higher. Cash cattle was higher last week. In the Southern Plains, cattle sold $1 to $3 higher at 191. Up here in Nebraska, cattle were steady at $1 higher at 192 to 192 at 191 to 192, excuse me. And then cattle were also steady over in the Western Corn Belt at 190. Box beef was mostly higher on Friday. Choice ended the day at 312.04. That was up 420. Select ended the day at 276.73. That was down 37 cents.
Outside markets to start the week. U.S. dollar's a little bit lower, but has been strong in general. Stock market's mixed. Bonds are about flat. Gold's up $20. Crude oil is up 92 cents in the January WTI at 68.12. Have a great week, guys. We'll be back on Tuesday.